Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 4th of July. So I've seen some pretty reasonable moves on some of the currencies this week, but we've seen an all-time high hit on the S&P 500 as well. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that we've had a very, very unusual week in terms of what the market has actually done. We can see very long wicks on all of these candles, and realistically, it's actually done a whole lot of nothing. It's been in a very, very tight zone around that sort of 65-80 area. Every day has attempted to go lower, but it has picked up by the end of the day. It's very, very unusual to see so many doji candles in a row, and you can see we had a decent move on the Monday at the start of the week, but effectively it has done effectively nothing in terms of open and close for the remainder of the week. It's broken out of that little mini zone that we were concerned about, but the 20 moving average hasn't even been touched. So realistically, what we're looking for now is a break above this 65.80 area, a daily close up there, and then we'd be looking up to that 66.20 as the next target. We need to be mindful for all of the things that we're going to see today. That is the 4th of July, Friday holiday, of course, in the US, which means a lot of the markets really do pause, and we're going to see a lot of sideways moving action probably over the next 24 to 48 hours, especially prior to the weekend, and then we'll kick off again on Monday. So you are going to see quite a bit of this in the analysis that we're going to do today, but really not a lot to report other than we need to get a close above 65.80 before we start targeting that 40-point range after that. If we see a close below the 20 moving average, and that's has to be below effectively 65.20, that's the only time we're going to look at it differently with a different lens and start looking for shorting opportunities. But apart from that, pretty stable on the Aussie. All right, over to the US dollar, CAD, and look, we've seen a testing of this absolute low that we've had most recently at 135 sort of 50. It hasn't quite reached the 135.50 to the point, but it's very, very close, and it is tempting the move all the way to the previous low. It's been obviously hit the 20 moving average and pulled back. Well, either way, we're either looking for a double bottom here or a potential move up and reversal past the 20 moving average. I wouldn't go the aggressive attempt at the double bottom yet because it's still obviously trying to break down to a new low. If we get a daily close below 135.50, however, on the daily, I'd be starting to target the next move down to around that 134.40. It's looking very weak. It's had a pretty ordinary week in terms of flow. You can see that although it doesn't look like it, it's actually sold off significantly since the previous week. We're talking about nearly 150 points. So it is a fair bit in the grand scheme of things, and it hasn't done it with a hell of a lot of volume either. So realistically, it's a bit of a do or die point for it, though. It's if it's going to find support, this is the area it's going to find it. But if we do get a close below 135.50, we'd be looking at moves back down to the 134.40 probably in the first instance. If we start to see a series of higher highs and higher lows from here, which is certainly possible given that we are at support, the 20 moving average would be the first target I'd be going for around that 136.50 area. So that would be the I'd keep them relatively close and handy, those moves on the US dollar CAD. All right, US dollar yen, another interesting one in terms of how the week has played out. It tested the boundaries pretty early in the week, as you can see. We pushed all the way down to 142.60-ish, and then it had a really big rebound up to 145. Look, it's such a big move of the yen. Yeah, you will get plenty of pips out of it when it does actually start to move. So hopefully you're able to get some of that, because we know we did have support around this level here. You can see all of the bottoms here that it did touch around that sort of 142.80 is actually the exact target that you would have been going for. But a good bounce off it, and if you go to a smaller time frame, you would have seen that there are some reasonable, even on a 15-minute chart, you would have seen the moves up through here before it actually did go, and then it blasted through in one big announcement. You can see that obviously kicked in. The yen does that quite a bit, but now it's starting to subdue a little bit. You can see we've got a little bit of turnaround, hit the moving averages, both the 20 and the 50, but there is resistance here as well around that sort of 144.90 to 145 area. So just be mindful of that. There is a bit of resistance centering of that channel, but for mine, if we get a daily close above the 145.20, I'd be looking at moves back up to 146.50 on the way up. And if it does continue to sell off from these moving averages, I'd be looking back down at these lows at 142.80 as the target on the low side. All right, dollar index, and look, it's been a very interesting week for it as well. It's tried to stabilize at the base that it hit for us. It did get to the level that we wanted, which is great, which is obviously a good euro trade, which we'll touch on in a few minutes. But you can see here that it's found support where it needed to find support. It's tried to go higher. If you go to a smaller time frame, you will see the movements off that base. It tried to basically cycle up. Then we had a big gapping event, and then another gapping event on the way down as well. So it's been a little bit of a volatile time for the dollar index in terms of trading. A little bit more stable on the euro, of course, but it's attempting to maintain this base. And I think what we're looking for really is a move potentially up to the 20 moving average around that 97.80 on the dollar index, which is going to, we'll look at that on the euro as a short, of course. But realistically, that's also a bit of a role reversal zone, as you can see as well. You can see the base, the 97.80 was a support zone right through this area here, and also around here as well. So I'm not going to put a line there because it's going to make too many lines on this. It's been cycling down so much. We're going to have more lines than we are going to have candles. So what we're looking for now is a bounce up to the 20 moving average. And I would expect that we're more than likely, that's the place it's going to find resistance. And if it breaks through there and it's trading above that next week, so if we're trading above 98, that means it's broken that resistance and above the 20 moving average, and then we're going to start targeting that 99.80 to 100 zone again. So interesting trading, but the euro is the one we'd obviously be looking at. You can see that it hit the level again. It hit our target basically early in the week of 117. The 119 secondary target is still a possibility, but I think we probably want a little bit more of a pullback first, either to the 20 moving average. That would be okay. I think that'd be more than okay, actually, if we're going back to around that sort of 116, probably 116.50 by the time the moving average actually moves for the next candle. It'll be pretty close to that level. That would be a really good rebound zone for it. If we see a bit of a kickoff from there, we look for the previous high as the first trade. And then after that, we look for the 119 as the target. But of course, the dollar index would have to break that low in order for that to happen. So we'd have to be looking for a bit of a cycle down. I think the euro has been very stable, though. You can see there's no gaps in the way, this fund's been trading. It's been very solid. A pullback would be healthy here. I don't think, I wouldn't be worried about it at all, actually. In fact, it would entice me to look for long opportunities. If, of course, it breaks past there and it's trading underneath the 20 moving average next week, then we're going to start to look at those lows around the previous high here, around that 115.50. But it's got quite a bit of work to do before it does that. So I wouldn't be looking at that as the main objective. I think joining in on the long and looking for a bit of a pullback would be the better trade in this regard. All right, and onto the S&P 500 again. Like I said earlier in the video, all-time highs hit again. It's basically crept up the whole week, kept moving up. Often does prior to a very major holiday, like Independence Day holiday is, of course. So next week is going to be the telling factor. There's not really much we can do in terms of trade ideas for this one, other than if we start to see a series of lower highs and lower lows, we trade it to the previous highs here at around that 6100 flat. That would be the target I'd be looking for. That also coincides with the 20 moving average. So early in the week, that's what I would be expecting probably to happen. I don't think that we're going to come out of a public holiday and keep ramping up. We're more than likely going to see weakness. It's a very seasonal thing that happens after public holiday. So I would be looking at that opportunity to potentially short it down to the 6100. So if we see a series of lower highs and lower lows early in the week, I'd be looking at joining in on those in the smaller time frames down to the 20 moving average and the 6100 resistance zone, which should provide support. And then, of course, we'll be looking for a reversal from there. We'll be looking for a series of higher highs and higher lows on the smaller time frame off that base. But if that base breaks and it continues to sell off, that's another story altogether, of course. And then 6,000 is the target we'd be aiming for. So we'll see how that one plays out, though. I think it's a case of you don't want to be guessing it. You want to be letting the smaller time frames certainly kick in. Let them start to cycle in their lightning bolts and trade in the direction of whichever they go. But really, Monday is going to be the time to be jumping in on that one. We don't really want to be doing too much now. Let's see what happens after the public holiday, and whichever way starts the trend is the way we'll jump in. But the shorter side to the 6100 would be the preference. So hopefully you've had a great week's trading. We've seen some pretty good moves on, obviously, the indices, and the currencies have played the game inside the boundaries. So hopefully you're able to take advantage of some of those. Have a fantastic weekend. I look forward to seeing you all next week.